I'm Takashi Nakazawa from Japan Barriers Tokyo. I'm heading the international relations in Japan, and I'm also looking at our affiliate in Thailand, in Cambodia, and other countries in ASEAN. So I have been working as a valuer for more than 20 years, and then I may have some kind of advice to the people who is young and who is now just start doing the valuations. So I'm happy to exchange the ideas with you today. So it's a very tough question to answer in a short time, and I'm actually based in Japan, so my comment will be something related to Japan, and I definitely feel that Japan is very prospective in terms of the investment. So the one side that our Japanese yen is quite weak under the circumstance, so we welcome a lot of foreign travelers towards Japan. Also a lot of investments from abroad to Japan. So that's the way that we have a lot of opportunities for valuations, doing the hotel valuations, residential valuations. There are so many opportunities. At the same time, on the other hand, we have a lot of the foreign investment from Japan as well. So it's kind of, maybe we need to talk a little bit about the situation, because as I said, the Japanese yen is weak, but Japanese investors try to invest more to the foreign countries. Actually, the number is in 2025, February, the amount of the overseas investment, real estate only, versus investment reached about 150 billion USD. So it's a big amount. And then why then, the Japanese yen is weak, but still they prefer to invest towards the foreign countries. So where's the cash? Where's the money, right? So the another thing we need to explain is we have a lot of cash with the households and also in the companies in Japan, because as you know, we've been in 3 decades of deflation economy. So in the deflation economy, the cash was believed in the most precious, most important, right? So everyone keeps the cash under the bed, both at the households and at the companies. So the company's profit is retained as a cash or savings bank accounts only. They do the investment in the deflation economy. And then now we finally reached to the inflation as is in the other countries, so that they try to invest more from the cash to other assets. Of course, the stock market is now very much enjoying the prices, but also real estate is also very much a good option under the inflation economy, so that the companies and households, they have cash to invest to the foreign countries. So that's how the Japanese still take part of the kind of the important role when you look at the real estate investment cross-border. So the Japan to Thailand, Japan to USA, Japan to Australia. That's very good questions. I have been working in the emerging countries very much, but after the COVID, actually the trend, we can say, has been changed. Normally, where we have the risk, where we have more profit, right? After the COVID, maybe the more risk, the less profit for the emerging countries in a sense. So the Japanese institutional investors, they tend to shift their priority from the ASEAN countries to USA, to Australia, or to the UK, and rather than they just prefer the kind of stability to investment. So emerging country investment is a bit stagnant, I think, in these days. But it will come back, because the more risk, the more profit. That's the way that we have in the long term. So they will come back to the ASEAN. Many challenges, and then the world is changing very rapidly. So we need to consult with the local experts like you more frequently than before. So I'm not able to catch up for all the markets, and it's very difficult. Every country is changing very rapidly. So I think the challenge is we have the language barrier. So we need to talk with the kind of common language. I'm not just talking about the English, but we need to understand the valuation standards of each country, and each side needs to understand the global international standard to exchange the way that we do. So that's a big challenge, but we can do it very well. And then maybe I want to say, like, we're doing the interpretation of the market. So the market interpretation is the biggest job for us. So how, not only the language, but also the how we interact the market is the key, and it's a big challenge. Interpret and then exchange. That's the biggest challenge. The day-to-day work. It's a it's a difficult question, but the day-to-day, we're more familiar with doing the online meetings rather than text. We really like to do the online meetings than before, right? After the COVID, everything's changed. Even though we are limited to visit those countries, but we can do the online remote. So yeah, that's the day-to-day. The Chinese, the mainland China, the real estate markets has been stagnant, so that the Chinese investors tend to be more coming outflow to the ASEAN, to Japan, to the other countries. And also in Vietnam has been in a good position of welcoming the real estate investment from Japan as well. But now they just completed the restructuring of the ministries and other agencies. And that I think now it's kind of temporary stopping to do more investment towards Vietnam and also towards India. India is very much emerging for Japanese investors. Japanese major developers, they rush to invest more to India. So it's more like various, and it's more like complicated in a sense. I think more or less all the same, but yeah, the asset types becomes more like complex and various. But still, I would say, in Asia, the traditional type assets like offices or residentials are still standing in a good position, and maybe we need a very good combination of the alternative type assets and the traditional type of assets. When we look at like USA or other countries, maybe they shift very much. The office market is not such good in some countries, some areas. But when we look at in Japan, Singapore, to some countries, and still the office occupancy rate is quite high. And office is still believed to be one of the important sectors in the real estate investments. Uncertain market, yeah, it's more uncertain than before, right? In everywhere, I think. So in uncertain market, the most important thing is we need to understand the principle of the conservativeness. So once you get mad with how to deal with the situation, how to deal with this uncertainty risk, you need to understand how you become more conservative. So if I'm annoyed with judging the rent, judging the cap rates, we need to be more conservative if you have more uncertainty. So that's good for clients, and we can do as an experts to explain more in a conservative way. So the conservativeness, and also we have a lot of trade-off in the valuations. So once you got a growth of the rental or income more like sharply, you need to keep the other side. The other side means maybe the expense, or other side means more like cap rates to make it conservative. So it's a trade-off of the two different sides, right? So I believe that those understanding together with the conservativeness will give you a more like a professional, good manner in the world of uncertainty. Yes.